Hello and welcome to the Mortgage Conversation with Saffron for Intermediaries. I'm your host, Tony Hall. Another wonderful guest panel today, and I will ask them to introduce themselves in a second. Before we start, I just want to say that we're recording this episode on Wednesday, the 17th of December, and so anything we discuss will be correct up to this date. I will also say that the views and comments expressed today are those of our own and not necessarily of our employers. So, let's meet our guests. Firstly, hello to my co-host, Lee Williams.
Hello, you all right?
I'm very well, thank you. How are you?
I'm very well, thank you.
Good. We do this every time.
I
so
know,
it's always
I know.
Nice.
It's just between us.
Anyway, and I'm bored now. Delighted now to extend a big mortgage conversation welcome to two new friends of the show. So let's start with you, Mark. If you can just tell our listeners who you are, where you're from and what you do, that would be fantastic.
Hi. First of all, thank you for inviting me today. It's great to be part of the show. My name is Mark Edwards. I'm the principal at Mortgages and Insurance Solutions, a mortgage and protection brokerage in North London.
Fantastic. Thank you so much for joining us. And last but by no means least, Alice, if you could do the honours for our listeners, please.
Of course. So I'm Alice Waite and I am the new BDM. I'm the new BDM covering London for Saffron.
Excellent. Fantastic. Look, we're going to have a good show. So the focus for the podcast today is all about complex lending in 2026. So we've got a series of questions. So the first one is complex lending market versus the specialist lending market. And within that, the rise of the mutuals, who are starting to take a real hold, particularly in the complex. So, Mark, let me come to you first. If I say the term complex lending, what does that mean to you?
Complex lending? Well, you mentioned complex lending as opposed to specialist lending. And I think complex lending is more from the borrower's perspective. It's where it's non-standard situations. So it could be things where self-employed, complex income, so income from more than one source, larger loans. It could also be the property side of things, so like HMOs, unusual structure. It's that type of thing. So it's where it's basically not tick box lending. It's where you need and this is where the specialist lender comes in. It's where it's a situation where you don't want the computer says no. Yeah. It's not, especially in this world of AI where we're moving towards, where it's not going to be where automated decisions can be made. It's a question. It's usually a situation where you want the lender to take a deeper look at the client, and there's probably positive attributes to the case that may not be obvious, but that's again, it's where a good broker comes into play, is to present that case in the best way possible.
So how's your business changing to meet that demand?
I think it's an important area in that if I mentioned self-employed there, and I think they say 25% of borrowers are self-employed, but only there's only about 10% of the specialist lenders that are catering to it. So I think it's important for the broker to be able to reach out to those types of clients. And really let them know what's possible, and give them that outlet, that hope to show that your case may not be straightforward, but there are lenders that understand the situation and that cater to it.
And do you use many building societies in your lending mix?
Yes, I do. Recently we've moved into. We've done several cases with yourselves, Saffron, and it has been that complex area that has been the new opportunity, if you like. Things like expats, limited company lending, a lot of with the rise of the taxation situation, the changes that we had in 2015, a lot of landlord borrowers have moved into the incorporation space. So, you're looking at limited company situations where it may be a property in a personal name switching to a limited company, for various reasons. But these are situations where the broker comes into play and has to be able to show the applicant what's possible.
Yeah. I think this is a key one for the listeners, is that the power and the importance of professional advice in every situation. You know, you can go it alone, but it's a gamble. Whereas if you go to a professional brokerage like Mark's, you get a real sense of, you know, what you're getting into, and you're getting the right advice. Alice, let's come to you. So how in your, and by the way, welcome to Saffron. You're celebrating your first month anniversary,
1 month
which is
today.
very exciting. How have you seen the complex market evolve over the last, say, 12, 18 months?
Yeah, I think it's been a build-up actually over the last couple of years where, and I don't particularly like the term unprecedented, but where we've seen so much change in the last 5 years, and people have had to adapt. And by that happening, we've seen our kind of clients all adapting as well. And actually, you're then seeing the rise of the smaller mutuals, the building societies, who do those slightly unusual cases, who do the things that you wouldn't often expect them to. And actually, you kind of get that. There's a lot of times I have conversations with people where they go, wow, I had no idea. I had no idea that you would even look at that. But from my personal view, with the kind of smaller societies, you seem to find that human underwriting, that actually you can talk to someone, and as long as it can make sense, we'll do it. And with the way that the clients that are kind of coming into the market, the way that the market's going, I mean, I was reading up about kind of the predictions for next year yesterday, and it seems that we're going to get more of those clients that are moving slightly off the high street, probably not kind of down to some of the really, really specialist lenders, but kind of sitting there in the middle. And I think that's where we're going to see a lot of kind of our colleagues in the industry and a lot of other societies are just getting more and more business, because actually we're adapting as the world is.
That's good. It's definitely more and more people, as they're having to struggle to live with affordability, etc.,
Yeah.
are looking at different ways to work, a different way, and they need a lender that can understand that.
Yeah.
Lee, what advice would you provide for brokers who want to broaden their complex lending opportunities as a business?
I think first and foremost, it's about education. So ultimately leaning on those lenders where you can get more value from them. So they're not going to turn up and just talk about their USPs, right? That's not going to give you that education piece of feeling confident about working in the complex area space or where they can evolve. So I think first and foremost, it's getting the right lenders with the right BDMs, which obviously I expect that my team is one of those, where we can educate and go, right, actually, you want to work in this space. You want to be saying yes to these customers you're currently saying no to or not exploring fully. So self-employed being one that obviously you mentioned, Mark, affordability being another one, because obviously it's such a key topic, self-build. There's so many areas now. So, and I think the other key thing is not to flex too widely. It's almost home in on a couple of areas at a time and really home your craft in that area and choose something you actually enjoy looking at, right? Everybody wants to be there for everybody, but actually if you find a space that you really enjoy working in, like a self-build, like in self-employed, home your craft on that and then explore off the back of that and evolve from there. Because there's nothing worse than trying to learn a subject that you don't actually enjoy. So, that obviously carries when you speak to your customers, in my opinion. If you're passionate about a subject, you're exploring, you're learning, you're working with the right lenders, that would be my bit of advice, is to do that rather than trying to stretch too widely and cover too much in a short space of time, which we can all be guilty of doing.
Absolutely. No, I think that's really good. And I think the just to finish this off, I've stuck record, but I say it on every podcast, is once you've decided what you do, make sure your website tells people that. Otherwise, you might be surprised you don't get any leads. So do make sure that your website is really clear about what you enjoy doing and what you're good at. But Lee, let's go back to, obviously, Mark kindly mentioned that he'd used Saffron, and this was quite this was a first for us in terms of this case.
Yeah.
Let's just talk about that a little bit.
Yeah, so I can give some. Mark probably knows it. Well, does know
Little
it
bit
considerably better
more.
than me.
Yeah.
But I think just to sort of signpost, I guess. I think the key thing with this market is that there are so many different solutions out there, and all lenders are flexing and in different ways. So one way that we flexed is around affordability, like some others. We have launched a product that enables brokers, in my opinion, to be brokers and actually look at things with affordability without a tight income cap. But it then leads to good quality brokers needing to look at things very holistically and finding the right solution, which obviously Mark's done. Been the first to use our Premier Income product, where we have dropped the need to have the income caps, loan to income caps, which obviously you can explore more than me.
No, I think it was, a number of things came up there. First of all, when was a communication when you launched the Premier product. We received the communication showing that a broad outline of the criteria, and what struck me straight away was this idea of no cap on the income multiple. Now, especially in the current climate, that's a big deal. But you have to dig deeper and really dive into it. So the first thing I did was I reached out to Saffron, spoke to our BDM, and got a really good understanding of how the product works in practice. Because there's always the theory, but how does it work in the real world? And what I understood immediately was what you were doing was looking beyond the prima facie case. What you were looking to do was say, well, okay, if someone's either a long-standing professional or an established business person that's established in their field, and they've got a decent income and they're looking to do a major purchase, because the key thing is the minimum loan size is £1 million. So it's got to be over £1 million first of all, and then the income, provable income, has to be at least 150,000. So there's got to be some substantial income. But the key factor is, whereas most lenders, pretty much all lenders would look to say, right, okay, you've got an income of 150,000, and most will possibly lend you on that. Typically 5 times income. In latter times, we've got maybe 1 or 2 lenders that have pushed the boat a bit on that one and going beyond the 5 times income, which we could talk about later. But really, the absolute ceiling is 7 times, and that's only one lender, and that's in a very specific set of circumstances. So for a new product to be launched where there is potentially no income cap, and you're talking about 7 figures, that's a big deal. So I got a better understanding. What became apparent to me was what you was looking at, which is really good. What you was looking at was saying, well, okay, if you've got an established business person or professional who's looking at making a large scale purchase, multi-million pound purchase, residential, there's got to be a reason. Then they're a sophisticated borrower, so they know why, even if the tax returns may show something else, but they know why they're prepared to take on that commitment. So there's got to be more to it. So you've got to look deeper to get an understanding, and you're going to have the complex income. This is where it comes in. You're going to have things like dividends, or a key one for us is that, which we always bring to clients' attention when we're assessing their circumstances and situation, is the retained profit within the business, because obviously if they pay the dividend, if they pay the salary, there's going to be a taxation situation, and if their situation is such that they're in a comfortable scenario where they don't need to draw that income, why draw the income and pay the tax unnecessarily? You're moving it from one account to another account, both accounts which you control. You're moving it from one to the other, but that event has triggered a taxation situation. So it's being able to understand why someone may not show that income in a easily understood one place. So it struck us straight away that there was great potential here. So what we did was, I got a great understanding of the product, summarized it, key points in a communication to our database. We put it out. We do a weekly newsletter. We put it out to our database, and within an hour of that newsletter going out, we had a new inquiry from a client that we had never spoken to before. I think it was one of our existing clients had passed it on, which is a great, shows a talking about how do you communicate with your audience. So that was great. That was a first success, if you like. So we got this inquiry came in. I dealt with it myself at the time, so this was an IT consultant, very well established, very successful, and he was looking at buying a £3 million new residence. But again, the situation was that his income wasn't necessarily straightforward, that you can just say, okay, we can see where all this money is and do a simple calculation. So it straight away, I spoke to yourselves. We ran the affordability. I got an understanding of where his money was, and the business behind his consultancy, and it fit. I think it was exactly the type of client you was looking at. Absolutely. And it was fantastic. So and I think from application to to offer was probably about 4 or 5 weeks. A lot of communication backwards and forwards. Again, this is the importance of the broker to understand what the lender is the reason behind each question and the request for the documentation, what it is you're looking to show, communicating that to the client, and then filtering it really when it comes in, get it in the right sort of state that the lender, to make it easier for the underwriter, to make the underwriter's job easier. Absolutely. Get the documentation to the underwriter in such a way that it's easier for them to come to the right decision. So as I say, the case was very successful. We got the offer out within 5 weeks. Client was over the moon. They actually exchanged last Friday.
Wow, nice. Fantastic.
Yeah, so it's not just a paper exercise. This one
will. Look, what a great ending to that first question around complex lending. We can't get a better example. Thank you for sharing.
I was going to add one more bit very quickly. I know you said it was the last bit.
No, it's fine.
But one thing that I find really interesting there is the way that you then generated a lead from lenders' propositions. And I think that that's something as an industry that we can shout more to our customers about, all of these great solutions that are out there. Obviously you mentioned ours, but there are a lot more out there as well, and I think that that's where you've got a point of difference with your introducers, with your customers, with your newsletters on a weekly basis.
Absolutely.
The content's there. Lenders are shouting and trying to find space to create some. It's a noisy industry. We're trying to find our voices. So I think in that sense, if you've got emails like that thing for me was a key takeaway for me, was that you used it. You did it in a way that worked better for your audience, and actually it translated. And that's what we're constantly talking about, is making something simple for customers to understand. Absolutely. And then you taking on that complex side. So, sorry, I thought I had to add that in.
No, look, it's a really good point. Yeah, well done. Yeah. Cool. Right, let's move on then to the post-budget world. Okay, so what's the confidence for 2026, I suppose I've titled this. So it's a few weeks now since the budget, and there's been lots of changes proposed for ultimately a few years' time. There's nothing landing now, so I'm kind of not sure how that budget solved the alleged budget hole that we have now. So interesting one. But Mark, how's the budget landed with your clients?
Interesting. I think the lead up to the budget was the issue really for us. Yeah. We certainly saw a hiatus in new business. There was a wait and see aspect definitely from really October, early October, even September. We saw a drop in new inquiries, and even of the business that we was doing, it was mainly remortgage, because I think the majority of first-time buyers definitely, and even home movers, were postponing that decision.
Okay.
For a number of reasons. I think everybody was cautious. There was a lot of misinformation in the run-up to the budget.
Yeah.
Whether that was intentional or not is a different discussion. But it definitely had the impact of causing uncertainty.
Yeah.
And as we all know, markets hate uncertainty. So I think there's been a drop in business. Now the question is, it seemed to be a lot of noise about nothing. As you say, yes, there are changes coming. Yes, increases in taxation, but they're kind of kicking the can down the street. So it hasn't addressed the immediate issue. It's kind of sort of like problems tomorrow rather than
So
today.
are those first time buyers and home movers now fully engaged back in the process in your world?
Yeah, I think we've seen activity levels increase. The talk at the moment is of the Boxing Day bounce, which is attributed to really the changes in the stamp duty, which will kick in April 26. So again, you've got this kind of rush before these increases come in to try and complete transactions.
Yeah.
So, I suppose in the short term, we're optimistic, cautiously optimistic, that we're going to see an increase in business, that people are going to get off the fence and actually do something. Certainty is everything. If you know what your costs are today, then I think most people are going to try and actually take advantage of that before things change.
Alice, what have you seen?
I think similar to what you said, Mark. I think actually the build up was almost worse, and the kind of chatter that was going around. And I suppose if we look historically, budgets, people have been stung by budgets, and it's been kind of quite shocking things that have come off the back. And I think we almost just expect that it's going to be that way again. So people think, well, if it's going to be either doing it now or doing it this time next month, is it not the safer bet to just wait, see what happens? Maybe they'll change stamp duty to benefit us, because we've had budgets before where they've cut it as of then. And so actually, when I started here, everyone was talking about budget, and, they're waiting for the budget and all of that. And I almost feel that after the budget, it was just a big sigh of relief, because everyone's like, oh, there's nothing hideous in there.
Yeah.
But it was that build up of the chatter, like you said, where people saying, well, this could happen, this is going to happen. And it almost ends up being like Chinese whispers. And I think that's the part where it actually gets dangerous surrounding that. I think what came off the budget was kind of not awful, kind of what we expected. But it was the people who would kind of read into it, tell their friends. I think that's where the danger of these budgets...
The damage had already been done.
Yeah, exactly that.
Yeah,
And then people saying, well, I saw her on TikTok. I feel like that's all we hear in this industry. I saw her on TikTok, or my dad told me this, and I watched a YouTube video on this. And you've got people that are kind of just almost scaremongering, and kind of putting people into a position where they don't know enough about it. They're relying on someone else who's potentially giving them misinformation. So I know I speak for myself, I breathed a big sigh of relief when the budget was... In fact, we were together on the budget day, and we were like, oh, okay. And we were all there outside the meeting looking through it and being like, okay, perfect. So I think the build-up's always actually worse.
It was a bit benign again. But I mean, there is some impacts, and I'll come to you in a second, because obviously you've got the mansion tax, which is going to reduce those properties, they saying, by about 50k on market value. And, not that I ever lament Nigel Farage, but he did say the budget has killed aspiration, because there's no incentive to have a bigger house. It's also killed saving, because they're reducing what you can save in tax-free. So it's a bit odd. All the things we're ingrained to do as Brits, save money, look after ourselves, and aspire to that nice property. We're kind of saying, don't bother, which is a bit odd. Anyway, that's my personal view. Lee, what opportunities have you seen, or do you think you've seen following the budget? Will there be any shifts in the market as a result of what we've heard and the run up to when these actual taxation events hit?
I think it was disappointing in the sense of it didn't create any aspiration, as you say, because there is no incentive now to move. But I think what it does do is create a lot of opportunity for home improvement. I think it creates a lot of opportunity for not just home improvement, but vast extensions. I think there's going to be times where they're going to go, is it worth me moving, or should I put that money into my house where I am? If there's the opportunity with the property they've already got. So I think that's one key area, is actually the renovation opportunity. I can see that coming down, because ultimately if you can save that stamp duty and put it into your house and create the extra bedroom you need, then that's an opportunity now that a lot of customers might be sat on their hands going, I don't have any options, but actually there could well be. But they're instantly stuck with that stamp duty. So I could see the opportunity changing there. I think the affordability model is something we talked about a lot already, but with the fact of freezing our allowances leads to some changes when it comes to affordability. So having more flex to look at things like true affordability models, rather than having loan to income caps all the time, or stretched loan to income caps, creates new opportunities. I know, Tony, you're not a fan of this, but the quirky cases, and a phrase we use a lot, quirky, but the quirky's probably got quirkier, from that point of view, because people are changing the way that they operate. And if you look at business owners now and the way that they're looking at how their additional costs are, going down the route of 0-hour contracts, going down contractor routes, it's created this requirement for employers to look at other ways to reduce their costs and actually change their workforces. I was talking to someone at the weekend who has a small business. They employ a few people. They've had to look at, is there a way that they can have a more flexible workforce so that they can be there when the demand is there, but ultimately not be forced to take people on fixed contracts or fixed hours. And there's going to be a lot more of that depending on the type of business that they are. So I think there's a huge amount of opportunity, but actually what it leads to, again, in my opinion, is brokers getting more and more comfortable with solutions and looking for those solutions.
Yeah.
And like I've said previously, understanding the problem. We're very quick to give solutions when we don't always understand the problem. And I think that's where brokers will do really, really well. And to go back to the other question you asked me about what could they do, well, get a bank of questions, get an understanding of how well do I need to get my fact find? How robust is my fact find got to be before I give a solution? Or am I going to be constantly going back and forth? And I think that's where we're sort of going back to the old school, how good's your fact find? I think it does need that.
No, you're right. I think one of the other things that the budget didn't really touch on is planning reform, because all these things are great, but to your point around, I'll build my extension, but planning, if planning doesn't allow that, or there's a 6-month delay in getting that approved, then it's kind of, you got to tidy that up as well, haven't you? So that's one of our biggest hurdles. Obviously, as we now have a fully operational property development finance proposition from start to finish, that's a big flashing light on our agenda, because it's stopping people building houses, which is what the government's saying is one of their primary agendas. So it's an interesting thing. Thanks for that. Let's move on to another interesting subject around proc fees, or the rise and fall, as I've called it, or probably more aptly the fall, depending on who you're talking about. So very high profile news, which funny enough was aired the same day as the budget. What a surprise, in terms of Lloyds Banking Group reducing their product transfer rates. Okay, so it's an interesting one. Being from my perspective, and this is purely my perspective, they've been an outlier for a number of years, because they've actually paid the same rate as new business, and they're very proud to say that, and brokers love them for it. So the fact that they're actually now dropping down to probably a market level, I don't know whether we should be celebrating or just understanding their position. So it's an interesting one. So before I carry on, Mark, what was your response to that news?
Well, I was disappointed. And obviously as a broker, I'm not going to be a fan of it. But it's not just a question of a turkey not voting for Christmas. It's like, you know, I mean, you know, there's practical reasons why, because I think the thing about product transfers is, from a broker's perspective, the level of work involved is pretty much the same as if you was doing a remortgage. Because you know, from a compliance point of view, we give advice and we have to stand behind our advice. So we've got to, just because the client, even if the client says, I'm looking to do a product transfer, you've still got to address that case from the point of view of what's in the client's best interest. You've got to look at the remortgage proposition to see if that's a lower cost option. You've got to compare it to what his existing lender will offer him. You've got to do all the calculations. You've got to look at the client's situation. You've got to look at what their aspirations are for the next 2 or 5 years to make sure the advice you're giving is correct, because you know, you're responsible for that advice. So the resources and time and effort and compliance is actually the same as if you was doing a remortgage, but you're not getting paid for it. The other issue as well is just that when it comes to the actual applying for the product transfer, obviously the documentation and the process is simpler than if you was doing a remortgage. So this is what's led many brokers, but not all, but many brokers haven't actually charged, for the brokers who charge fees, which is for in pretty much across the board now. That's the way the industry has kind of gone for obvious reasons, because to give quality advice, it's very hard to do it without charging a fee. So the problem the broker has, though, is if you're doing a product transfer, because it's on the face of it a simpler process as to regards securing the product. Many brokers kind of, especially for an existing long-term client, lean towards perhaps not charging a fee. So they're reliant on the Proc fee. So if you then cut the Proc fee as well, you've got to look at it from the broker's point of view and say, is this business cost effective? Yeah. So I don't think it's a good step at all.
I to be fair, I'm not sure what their rationale was. I haven't really researched it that much, but it's a very good topic and a very good answer to that, which is one that we understand as well. We're not quite at that parity of new for PT, but we came in at a higher position than the market, but we constantly keep it under review, and that's really good feedback around the process that I will take forward. But I want to broaden this topic and talk a bit more about differentiated Proc fees linked to an ever-increasing complexity of clients' needs. So as a lender, we already recognise complexity in one of our product categories, which is self-build. So we pay 1% Proc fee for self-build as opposed to 0.45, which is our standard position elsewhere, because we understand that it's a more complicated process. And we are considering broadening that into other areas of complexity. So I suppose, Lee, I'm interested in your thoughts on this subject, really.
Well, it goes back to Mark's thoughts for me on how much time is a broker spending on something as well. So, if you are doing a more complex case, it goes back to how much time you're then spending on the fact find, on the documentation, and actually creating that appetite to want to do that type of business. I mean, I think, honestly, the market's moving that way anyway. So, if the quirky case, as I use the phrase again because I know how much you like it. So the quirky case is the norm. So if we're saying if that's the norm and it's now just becoming quirkier and quirkier, then ultimately we then have more and more time being spent on that. And therefore there is that need to make sure that professionals are getting suitably paid. But ultimately, the other side of that, you've got to think who is then ultimately paying for that, which obviously then needs to go into the product itself. So there's a double-edged sword on this for me. It's making sure you've got the right balance, but also acknowledging and having a nod to the fact that there is more time being spent on these more complicated cases.
Mark, Lee, thanks for that. And kind of tying into to Lee's point there, and you kind of mentioned it with the Premier Income case that you did with us, but if you could paint a picture for our listeners of how much extra work you do as a broker on a complex case, and how much effort you believe is currently reflected in the prop fees that you get?
Yeah, that's a good question. I mean, first of all, any client coming to you will, quite often say, "Oh, my case is quite straightforward."
They all are.
Exactly.
Yeah.
But then no two cases are alike. It's not one size fits all. You've always got to do a detailed, deep dive fact find to gather all the relevant information, ask all the relevant questions. Interestingly, this is what they talk about AI, how it's going to change our industry, and is AI a friend or a threat? But for me, you're always going to need a human element. Even in and gathering information is one of them. Completing a fact find, one of the things I show my new brokers when they join the business is do not email the fact find to the client and get the client to fill it in. You learn so much just in the way somebody answers a question. Yeah, will tell you need to maybe ask the same question again in a different way, and you're going to get a different answer. Yeah. You can hear in the way, sometimes it's just in their voice, they want to tell you something, but they're not sure how, or the relevance.
Yeah.
And this is the sort of thing that the human, and this is why people will say, I want to speak to someone. Yeah,
absolutely.
I want to answer the question honestly and correctly, but I want to speak to a real person with some empathy and some understanding that the machine is not going to give you. So there's our business is a people business. It is about the individual. It's about the human side of it. So for me, do I fear AI? No, I don't. I think for quality professional brokers, they will use it, and it will enhance our process. But ultimately, it's the person behind the phone, that's going to be the important thing. So complexity of cases, as I say, I don't think there's really the idea of a simple case. Happens occasionally, but maybe that because maybe the broker missed something, But the key thing is you've got to do your approach has to be the same regardless. You've got to give a full comprehensive service. So you've got to and our strength is that we embrace the complex. That's we've it's all about finding a solution. So the work involved. Sometimes from the outset, it's, like say a large loan case, someone that's trying to borrow several million with that unnecessarily being able to, it's not a straightforward aspect to how we're going to evidence the income. So from the outset, you're looking at that and you're preparing that because you have in mind how you're going to present this case to the lender. You have in mind what the lender is looking for, and how to present this in the best light, or to get to the crux of the matter quickly, because that's the delays and the complexity comes when the to and fro. Yeah, lender asks for a set of bank statements. You give the 3 months bank statements, and that only leads to further questions. The skill of the broker is to, when they get those 3 months bank statements, they interrogate them themselves. They see the issues. They ask the questions. They find the answers, because it's a bit like presenting across as a barrister presenting a cross examination in court. Never ask a question you don't know the answer to.
Absolutely.
It will, because you don't want to be standing there shocked at the answer, and then but the lender's already asked the question. We got to give them the answer.
Yeah.
So really, the skill of the broker is that they've assessed the case, they've found the weaknesses, they've found the strengths. And they still come to a conclusion that, yes, it's feasible. Yes, it makes sense. Yes, this is a positive case to present to the lender. We just have to do it in the right way, to make the lender's life easier. So as they're able to come to what, obviously as a broker, you feel is the correct decision, and give us a positive decision on lending. And this is but all of these things, as I say, no two cases are the same. But it's across the board.
Yeah.
Regardless of the complexity, whether you're talking about a self-build, an HMO, it's interesting that you're now moving into that from beginning to end scenario. I mean, we'll talk about it more. But I feel it's going to be a similar thing for sort of like the bridge remortgage situation, where at the start it's not it's a case where you're short term funding the development with the exit being determined on day one, so the client has surety of that of the costs involved, and that they know they're going to end up on a product that's suitable for the longer term rather than the shorter term. So it makes a lot of sense.
Good. Right, I'm conscious of time is racing away from us. This is really good conversation. So I think on that one, the take for me is actually the premium for lenders for working with someone on a complex case that gives us all the answers up front and straightforward means that you've done more work and you've done your job properly, and therefore we should reward you for that.
Absolutely.
So that's really useful feedback for us. Right, let's move on to our next question, which is around the Renters' Rights Act. I won't go through all the stuff, but Alice, I'm going to come to you because I think your background's a bit more buy-to-let focus, so I just want to come to you first on this. Do we think that this act is the final death toll of the part-time landlord?
So it's really interesting because everyone's been talking about it because it's going to change so much. I mean, I heard everyone referring to it as the biggest landlord shake-up in 30 years. And it was only when I started, I actually watched another lender give a presentation on it, and I didn't realise quite how much was changing. I think that, I mean, I always say, anyone who was in financial services in April 2016, it was one of those, you remember exactly where you were when second rate stamp duty came in. And I personally was working in a little office doing mortgage admin at that point, and everyone was just calling me up saying, I need to complete today, because otherwise it's going to cost me tens of thousands more. I think since then, we've seen things getting slightly harder for landlords, whether it was the kind of tapering relief of interest rates, all these different things. The Renters' Rights Act, I think, I wouldn't say it's the final thing. I would say that it's just them making it slightly more complex again. I think some of the things in there are fantastic. I think, you look at that horrible case of that little boy who died in...
Yeah, absolutely.
You look at that and some of the things they're doing are very, very right. But there's some things where, abolishment of Section 21, you look at the fact that you can't do a no-fault eviction, you've got the fact that people have to go into a certain amount of arrears before you can take them to court. And actually, this presentation that I was watching said, must have been about 6 months ago. And they were like, right now, to take a tenant to court is a 15-month wait list. Once this comes in, that's going to just get even longer. And you already saw people on the internet then starting saying, well, actually, you need to be in 2 months of arrears, get to when they've got that court date in, pay it down, and then start again.
Play the system.
That's what's frightening.
Yeah.
And I think I've kind of watched the market very closely for the last couple of years, as you'd expect, and as I would say in front of my boss. But I've watched the trajectory of landlords change in that time as well. That I think back to when I was brokering in kind of 2016, 2017, when everyone was just buying houses because it was fairly easy and buying all these investment properties. And I'd always say to everyone, look, you really need to gear this portfolio because at one point, if this starts to get more difficult, you want to be ahead of that curve. And so the trajectory that I've seen from that side is we've seen the kind of landlords with 1 or 2 properties that's who have started to get uncomfortable and leave the market. And I feel that actually the landlords who kind of have those established portfolios, they have it's geared that if one of your clients stops paying rent, actually it's fine because you've got all these other properties that are paying for themselves and they can cover that. I think it's a scary place, and I think it will be interesting to see when it does come in. As I said, I think some of the things are good that they've done in there, but I think some of it makes it particularly scary for small-time landlords, probably more so than big-time.
Yeah, and that's why I personally think it's a far more professional industry now, which is a good thing.
Yeah.
But to the points you raised, I think this is playing very much into the hands of people who do this professionally for a living rather than do it as a part-time
Yeah.
with one or two. Lee, let's come to you on what do you think the opportunities are in this in the buy-to-let sector?
Well, I think right now it's helping developers, landlords getting ahead of the game in terms of understanding what's coming down the track. Some will be more aware of it than others. And, there's obviously other factors in terms of, EPCs and other bits and bobs that are also coming down. I mean, there's been such a need for hand-holding, whether they've got that understanding, sometimes just giving them the clarity of their understanding it right. And yes, we can look at that. Going to Alice's point around gearing, are they set up in the right way? Is there opportunity to fund and give them the comfort that they want? Is it a case that, like I say, it is geared in the right way? Education is so key, and making sure that they're ready is the opportunity. Because actually, when they review a portfolio, and I've had this with brokers that I've worked with recently, where it's been pretty clear that actually reviewing that portfolio and looking at it based on its current climate, even just 6 months ago, it's so different. The rate environment's different. Looking at it now and going, actually, no, we've got more opportunities now based on the products and the rates that we've got available. Just being on it is a really key thing. So, yeah, I think that's the opportunity. Those that are in the game and absolutely are in the game, that actually there's going to be opportunities for them to potentially pick up more properties as well if people are saying, no, I've had enough. And then, so I've always feel there's a trade-off. There's always winners and losers. And those professional landlords, in my opinion, do have an opportunity in some situations to potentially look at other properties and expanding that portfolio as well. So it's not all doom and gloom.
No, I think it's both ways. I think one of the things that the positive side of that buy-to-let market is, obviously everybody's going down the SPV limited company route, and the fact that 1 in 5 new registered SPVs is from an international investor. So the rise in expat lending is growing and growing and growing. Right. One last subject, because we are running very short of time, and this is just looking at the UK Finance's mortgage market forecast for next year and just getting our view. So, in summary, it's pretty much about a like-for-like year. They're saying property transactions are going to reduce by 1%, gross lending of 300 billion, which is a 4% rise. And 180 billion of that is house purchase, which is a 2% rise. Buy-to-let, they're saying, is staying the same at 11 billion. Remortgage, 77 billion. 261 billion in product transfers. Arrears are on the down and possessions are on the up, right? Which is no surprise. There's affordability challenges everywhere. So I suppose coming to each of you, what do we think about next year? What do you think? What's your confidence for next year, Mark?
Yeah, I mean, just kind of summary from your figures there is pretty much more of the same. As it's pretty much stable. It's which I think the increases is just because of the value of the individual transactions have gone up, but the number of transactions is either going to stay the same or shrink slightly, which is kind of expected from the year that we've had. I think what's going to perhaps be the driver will be the interest rate decision tomorrow.
Yeah.
I think it's likely that rates will come down tomorrow and probably the latter part of next year as well. I think that will be a stimulus. We're optimistic. I think as a broker, you've got to look at it and say, well, at the end of the day, we are still talking about a multi-billion pound industry. And what you've got to focus on is your own skill set and your own abilities and increase your market share. Because at the end of the day, someone's doing business.
Absolutely.
You've got to make sure that you are well placed to be
in the right place. Absolutely.
Yeah, and that's what we've done. We've been in business over 20 years. We saw the credit crunch. We saw You know, that was a very scary time when, you know, your phone just stopped ringing as if you hadn't paid the bill.
Yeah.
You know, so that, you know, but if when you've been through that and you're willing and able to look closely at your own business model and adapt to the environment, you know, at the end of the day, we're talking about property. We're talking about everybody. The whole of the UK has to have a relationship with it. They either buy it, share it, or rent it. Yeah. So you know, you've just got to position yourself to ensure that your skills and abilities are well placed and reaching out to your client base and your audience, and to increase that market share. So we're investing not just in the business, we're investing in our people. It's very important for us that our team, their ambitions and goals align with the business's ambitions and goals. So it's important to us that we give them the right career path, the right investment in their education and training and qualifications, as well as the marketing side of the business. So yeah, we're very confident and optimistic. Looking to have a good 2026.
Excellent. Alice, let's come to you. What do you think?
Yeah, so kind of what I touched on at the very start, saying that I think we'll see more people kind of going to the specialist lenders rather than the more high street lenders. I also think we will see kind of a slightly smaller shrinkage towards buy-to-let, that where we've seen it and it's still been a bit uncertainty. I think because now the Renters' Rights Act has gone to royal assent. I mean, that's due to come in April, if I'm correct. So I think we're going to see kind of almost a slight hangover from that, of people saying, oh, well, actually now, once that comes through, I think we'll see portfolios changing. But I think we are just going to be focusing, we're going to see more of the kind of, I tried really hard to not say quirky cases earlier when I was talking.
You can say quirky. It's a personal thing I don't like.
So I say it often.
It's because I just think it cheapens your client. Personally.
I think we'll see some more of the kind of...
I'll edit it out, it's fine.
It's fine. Of the clients that aren't the 2.4 children white picket fence.
Yeah.
And the really fantastic news in that is that in a market like that, having a broker has never been so important. Absolutely, because you can't be just Googling this anymore. You know, you can try and use AI. It's never going to change. And I think we're going to see that kind of more for our side of the business as well, is that people aren't going to want to be searching through websites. They're just going to want to be talking to people and saying, well, I've got this case. I think we've seen more in the last 12, 18 months is that we've started seeing these layered cases that maybe 3 or 4 years ago you'd have one complexity, and now you're getting multi-layered of them. So it's not just as simple as going on and kind of checking one bit of criteria. You're having to go through it all. So I think that, like you said, we're still going to see a market. People still need to buy, they still need to sell, they still need to remortgage. So we're still going to see a market that's fairly strong. I just think we'll see slightly different clients at the end of it.
Cool. And Lee?
Yeah, I'm really excited about next year, to be honest. I think the space that we're in means that we actually have a lot of value to give. So I'm excited by that. I think for those brokers that you're talking about in terms of the way that you're looking to educate and invest in your team, you know, that's where we know that we can bring some true value. So I'm excited by that, because I think next year gives a huge opportunity for us to do that. I think the evolution of the market we've been involved in this year, we've made a lot of changes. That puts us in a nice position, I think. But if I look at the market itself, I'm excited by it, because I think that we've got some stability. The budget didn't ripple and create this mass panic or concern. So actually, from that point of view, there's some people that are sat on their hands at the moment saying, I'm going to enjoy Christmas and then go into the new year wanting to buy. But I think I'm excited by the opportunity. I think also, if I'm honest, I think it's going to potentially take some brokers not wanting to carry on being a broker. I think that will change the game for some, where that straightforward case, where that's where their bread and butter is, and they see some of those cases not being as straightforward, they might not be so interested. But again, I don't think that's a bad thing, personally. I think that, but it creates that hunger for brokers to want to learn, and I am more than keen for that.
Excellent. So I think that's a good point to end on. That we're all saying, well, to Mark's point, it's still quite a big market. We should be all right, really, as long as we just focus on what's the right thing to do, isn't it?
Yeah.
Excellent. Wow. Well, that 56 minutes has absolutely flown by.
Wow.
Thank you to our guests, Mark, Alice, and Lee. Please follow us on LinkedIn so you can be told when the next edition is released. And don't forget to watch us on your favourite channel or listen so you get notified when the next one is released. So if you like to watch a podcast as well as listen, then head to Spotify or YouTube. They're the best places to watch them. And my general safety warning for all listeners or watchers is if you are going to watch it, don't do so whilst driving or operating heavy machinery. It's my public service message. Well, that's it from me. So it's a goodbye from me and it's a goodbye from them. See you next time.
Thank you.
Bye.
Cheers.